Let's explore what would happen if the US stopped trading with China. This is a complex issue with wide-ranging consequences, and we'll break it down point by point. 1. Immediate economic shock. The US and China are deeply intertwined economically. A sudden halt to trade would create immediate chaos. American businesses relying on Chinese manufacturing would face massive supply chain disruptions, leading to shortages of goods and higher prices for consumers. Similarly, Chinese businesses reliant on US markets would suffer significant losses, potentially triggering a financial crisis in China. 2. Job losses. Millions of American jobs are either directly or indirectly linked to trade with China. These jobs are in manufacturing, retail, transportation, and other sectors. A trade halt would lead to significant job losses, increasing unemployment and potentially social unrest. China would also experience massive job losses, impacting its economy heavily. 3. Global economic instability. The US and China are two of the world's largest economies. A cessation of trade between them would send shockwaves through the global economy. International trade routes would be significantly altered, and the ripple effects would be felt across many countries. The world's financial markets would be in turmoil. 4. Geopolitical tensions. A trade war or complete severing of ties would dramatically escalate existing geopolitical tensions between the two countries. It could lead to further military posturing, potential conflicts in other areas where their interests clash, and a broader realignment of global alliances. The potential for unpredictable international relations is very high. 5. Impact on specific industries. Certain industries would be hit harder than others. American consumers would likely face higher prices for electronics, clothing, and other goods, heavily reliant on Chinese manufacturing. American farmers who export significant amounts of agricultural products to China would suffer devastating losses. The technology sector, with its complex supply chains involving both countries, would be particularly vulnerable. 6. Alternative trade partners. The US would likely seek to diversify its trade relationships, looking for alternative sources of goods and services. This would take time and likely involve increased costs in the short term. However, this might eventually lead to a more balanced and resilient global trading system in the long run. 7. Unintended consequences. It's impossible to fully predict the unintended consequences of such a drastic action. The global economy is immensely complicated, and the repercussions would be far-reaching and difficult to anticipate fully. This situation warrants extensive study and careful consideration of potential solutions before actions are taken.